Hello traders everywhere, Adam Hewison. I'm coming to you live actually from my home in Maine. Moved up here because of the warm weather we had in Maryland and happy to see that's receded. But here we are, it's the 9th of July and the question is global gloom sitting into the markets? It certainly looks that way with the markets, the way they're acting. Certainly the Chinese index is under a lot of pressure and we're seeing Europe not acting very well at all. And certainly the markets we're seeing at home are also under pressure. But let's take a look at one thing, and this is look at the S&P 500. And what I want to show you is this very simple trend line I want to put in here. And to do a trend line on MarketClub, you simply click on the trend line indicator. This is add and edit trend line. So click here. It shows you a yellow bar square here, and that tells you the trend line indicator is live. So you click on the lows here, and we draw this right up here, and you can see that this comes in right around the 330 area. So I think anything under 330, 1,330 is going to be a real problem for this market. What I could see happening is a market that basically is going to sort of just wobble around here and then eventually break down. Now the big thing is here, you've got to remember that our monthly trade triangles, which are right here, are negative. And also the daily, not so much the daily, but just for a short-term momentum. But the weekly right here are sort of mixed, they're pointing up. So you get this conflict and it gives you that 55 reading, which means it's a trading range right now. But certainly the markets, I don't think are acting very, very well. We've got earnings coming out this week, could be a major disappointment on some companies, and I think it's generally reflecting a slower growth. So let's see how this plays out, but you can see we hit the top of the Donchian trade channel, we moved out of that, and it's quite often this happens, you move out like we did here, and you move back in. We are moving back in again, and just like we moved out here, we sort of moved back in again. Of course, we had a nice rally then, but let's see how this plays out. But remember, the long-term trade triangles are negative on the stock market, so that's what we want to look at right now. So it's negative on the long-term trend. So let's clear the screen and go to our next market. In the next market we're going to be looking at is going to be another interesting market, and that is crude oil. Crude oil actually had a big move up. You can see how it's moved up, moved out of the Donchian trade channel, has moved back down. But again, we have the negative monthly and the positive weekly and the negative daily, giving you a 55 score. Again, this is a situation where you have a trading range environment. Now the market's come down very low, and as we've talked about before, once this market's been, every time it's been below 80, the market's had a good rally. We've certainly seen a nice rally, a 10% rally from the lows. And I think right now, if we go below the 84 and close below the 84 level, I think there's a good shot we'll take down and test the 80 level again. So I don't think we're out of the woods by a long shot yet on this market. So let's go to our next market. And the next market we're looking at is the euro. Now the euro took down really a big move. It's a 2-year low right here. Very tepid recovery. We're a little bit oversold, as you can see right here, so I would not be surprised to see the action as follows in the euro. The only rally we'll see, in my feeling, would be short covering or some concrete news. I think we could possibly go to the 124 level. Now remember, that's the previous low, which was support. That was a key level for us. We've broken below that, and I still think this market is going down to the 117 level to 120 area in the short term. So I would not be surprised to see the market hit those areas, but we may just see a little tepid recovery, then another big push down with more bad news coming from the banks. So let's clear that screen again, and let's go to our next market. And the next market we're looking at is going to be the silver market, and the silver market really has it really hasn't gone anywhere per se. It's been, I think, a huge disappointment. If we scope this out even further, you can see if we go, let's say, a year or so, or even 5 years, and you can see we have a minus 90, but you can see this market really made its highs back around about the mid part of April of 2011, and it's really just sort of come down just systematically, and I don't think it's going to be in fact, let's just do one thing really quickly. Let's take everything off the screen, make it very clean looking. even take our trade triangles indicators. So you can see the trade triangles doing very well in this market. And we'll just put a very simple line chart on here, which we can do. And I'm going to put my trend line tool, which I think the trend lines are probably the most powerful technical tool you have. And we'll just scope that out. And you can see, wow, look at how close that got to that trend line. So this is definitely a key level of support, which is right around the 25.50 area. I would say maybe even a little bit higher than that, 20, maybe 20, 26, 27, but certainly in that zone. It shouldn't break down below that. If it does, then this market's in a lot more serious trouble than we think. So let's scope to our next market. The next market we're looking at is gold. And gold, like silver, has had a big move up. Unlike silver, however, this market has broken a long-term trend line. So we're going to draw from the lows again. And you can see now that's almost a perfect trend line. And why I say perfect, the reason I say that is because of the following. You have all these points that are touching. You're touching right here, you're touching here, 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 and finally you break through right here. So I think that's an element that we should be really cognizant of. I don't think this market's going to have to take some work to repair itself if it's going to go higher later on, but there's also, you have an opportunity of seeing this market go lower, which I think will be a big surprise to a lot of bulls, I should say. So let me just do this. Let me just clear the screen a little bit because I want to share this with you as well. So let's just clear the screen, which is really easy to do. And you can see the trend line is very prominent, has been broken to the downside. And if we put a Fibonacci tool in here, which is, we've talked about this before, we go from the highs right here. So we have to get the yellow box. Remember, the yellow box comes up from the high right here, all the way down to the lows. Could we possibly see gold at 1300 or even at 1160? It's possible on the Fibonacci counts. It's definitely possible. So I think this market has been a huge disappointment for a lot of traders, a lot of bulls, I should say. We also want to look at this trend line here too. That's going to be dominant for a while. If this market's going to go higher, it's got to break over that line. So let's see how that plays out. So let's go to our next market. And the next market we're going to be looking at is going to be copper. Copper was under pressure. It sort of stabilized a little bit, and it's still not out of the woods yet. If we put our trade triangles on here, you can see our monthly trade triangle is still negative. Weekly's positive, giving you the 55 score we've looked at, but you can see we've had some nice moves in the monthlies here, for example, and out, and then here, nice on the downside. So I think it's definitely worth looking at and seeing how this market plays out. But generally speaking, I would not be surprised to see, scope this in a little bit closer. So there's the action you're seeing. Really, one thing to pay close attention to, I think, right now is this very sharp uptrend line we mentioned in our report today. So I think around under the 3.39 level this week, anytime this week under 3.39 on close, I think this market's going to go back down and test the lows around 330. So watch that very carefully. And this is the September contract we're talking about. So looking at our next market, this is the Reuters Jeffries CRB Index. That's had a big move up today. This is a very important top. This 295, this evening star, sometimes called in the Japanese candlestick terms, and doji also. It's very powerful. It was confirmed yesterday, or last week I should say, with his red bar down. This bar is just a retest in my opinion, and I think we'll see this market come under a little more pressure. So let's see what happens on that one. But again, a mixed signal. Monthly's down, weekly up, daily down. So trading range there. So let's go to our next market, and this is corn. Now corn has been on a tear because of the incredible hot weather. It's also up today dramatically. It's up 15, almost 16 cents. That's over 2% in corn today. And if you look at the other markets, obviously corn goes into so many food groups here in the United States. It's pulling up wheat. Wheat is up 1.28%, not quite so strong, but that's about over 10 cents, so it's $500 a contract. And looking at soybeans lastly, You can see the soybeans are also under a lot of upside pressure, but they've come down. Unlike corn, they've come down quite a bit from the highs. That's up 1.5%, 22 cents higher in soybeans. Trend is your friend. We talked about the trends being very dominant. One thing to pay attention to, in my opinion, is this possible divergence we're seeing in soybeans, and that's something definitely to take a look at. A couple of markets on the move, ETFs I think are on the move. One is FAZ, F-A-Z. It's a triple times financials, being short financials. Mixed signals there. Again, the monthly is up, weekly down. But it is putting in a pretty good performance today, considering it was under pressure yesterday, but we're moving back into an overbought situation. Let's put our line chart on here, because I think it's going to be interesting to see where our trend line comes in. So we take the trend line. If we close up here, I think it's maybe made that turn. Certainly some of the weeklies are very oversold, and we've had a big pullback from the high. So I would not be surprised to see this market move back up to the 26 to 27 level if we see more pressure in the financial markets, and in particular the banks. So let's go to our next market, and that's going to be the SDS ProShares. This is another ETF, and that's also doing well today, considering the markets are all down. You can see it's popped a little thinly traded. Well, I should say thinly traded. You're talking, maybe 12 to 15 to 25 million shares a day, which is a lot of shares. But nonetheless, this is a very positive day. You can see all the red days. You had 1, 2, 3, 4, 5, 6, 7, 8 red days, meaning the market closed lower than where it opened. This is the first positive day, blue day, and I think that's going to be an important one. Again, you want to look at the close-only charts, and if we put our trend line in there, you'll see that we haven't quite gotten over there yet, but we're getting close to it. So let's pay close attention to these markets. This is going to be an important week, in my opinion. And I said I'm coming to you live from Maine, and I hope you're enjoying this broadcast, and I hope you're seeing it very clearly. So Adam Hewison for Market Club. I'll see you tomorrow at the same time, same place. Have a great trading day.